We're live. Welcome, everybody. The dispatching hour is upon us. Welcome, Nick.
Let's get dispatched.
Let's get dispatched. We have a lot on this week, primarily because Bitcoin hit new all-time highs, if only briefly.
Yeah.
But we had some big news come out of the US. First of all, inflation came out, I guess, as expected, which means, I guess, markets markets reacted to that and things have been positive, but it wasn't quite the number we were looking for. So the big question is, does the public servant who released the figure still have his job? I don't know.
I love this joke. I think we should keep doing it. It's so good.
Who has Trump fired because he didn't get the result he wanted this week? Not us, because we're still here, obviously. What was his name? The guy who was the guy we worked out last week who might have been involved? He's left. He jumped the ship instead of going down with it. What was his name?
Oh, yeah,
American
Bo
Hines.
Hines.
Bo Hines.
Yeah.
Bo Hines. Thank you, Bo Hines, for not delivering quite the news you wanted. This week, okay, so the CPI news was the big news. It eased, but probably not enough to quite see the cuts that the administration and Trump in particular was hoping for. So Bitcoin kind of pumped and then dumped. And Ethereum, 2% off all-time highs, if I'm not mistaken. And investors lost their nerve, or the markets lost their nerves. But all the same, Ethereum Treasury Foundation, what we call them, the Treasury Company business is still going absolutely mad. Tom Lee just won't stop. He's continued to go absolutely mad. He listens to this show every week and has heard Nick's comments and can't get enough ETH. Right. This week also, we will talk about the 4-year cycle as promised. Well, Nick will.
Yeah, I have some things to say. I got some things to talk about.
Nick's going to talk about things with words and stuff.
No, and pictures. I've got a picture.
All right. So the big question is, when we're going to talk the 4-year cycle, we have actually, let's just jump straight into the 4-year cycle because the news won't change, but...
Neither with the 4-year cycle.
Well...
Unless we're here for a long time.
Changing real time, Nick. Let's have a go. Let's have a crack at this. What do we got? Got the photo popping up?
So I guess the image that you'll see now on your screen is a really, really zoomed out version of Bitcoin. This isn't sort of the 15-minute candle chart. This is the monthly chart, which shows you basically back to, I think, 2015 or something, if you look at the very far left side of the screen. That's the green and red candles. I've overlaid a purple line on top of it, which is the SPX 500. That you could sort of consider as a de facto kind of like how well is the market doing, I guess, specifically in the US, but how well is the market doing? How well is, general stocks and shares and whatnot performing? And the reason why I put that on top is because one of the questions I get from people often about the 4-year cycle is they only hear about it when they've gotten into Bitcoin. They've sort of never thought about it before. And therefore the next question is, okay, so this is a Bitcoin kind of cycle theory thing. It's not really. It also plays out in the stock market. So it's hard to see from the picture. Oh, not really, I guess. If you look at what I've done is I've broken up the last 2 4-year cycles. The big red arrow at the bottom is the one we're currently in. The blue arrow at the bottom is the last 4-year cycle, and this is specifically for Bitcoin. So as a bit of background, 4-year cycles are measured from the bottoms. So if you look closely, you'll see that blue line starts from the bottom, which I can't remember what the price was back then. It was something like 16 grand or 15 grand, which is the bottom of the last market. And then it gets measured all the way through to the bottom of the next market, I suppose, the next bottom that gets printed. Stocks do the same thing, but in Bitcoin, usually the 4-year cycle is anchored around the halving event. If you don't know what the halving event is, Bitcoin, every time a Bitcoin block is mined, which happens every 10 minutes, the miners get gifted a block reward. Every 4 years, the block reward is reduced by half. So at the moment, I think the block reward is, 3.125, something like that. In the blue line there that you can see, the block reward, actually no, these aren't measured in the block reward eras, I guess. So, sorry to confuse there, but so the previous one was 6.25. We're currently rewarding miners by 3.125 Bitcoin, but these 4-year cycles generally sort of anchor themselves around these events. Usually about 12 to 18 months after the halving event, you see some kind of all-time high, blow off top maybe, at least a 4-year cycle high, which has kind of been pretty consistent for the last 3 or 4 cycles. I've only done the last 2 here on this page just to keep things simple, but you can also sort of get some other ideas out of this. So if you look at the sort of the top arrow, which is like a lighter blue color, that is how long it took us to get from the cycle low to the all-time high of that cycle, of the last cycle. And so that was about, I think it's about 37 or 38 months. Just as an indication, if the same thing were to play out in this current cycle, which may or may not happen, it would be about December this year is when the next high is going to come through. So this is all just cycle theory, guys. By the way, I'm not sort of suggesting that this is what you need to work out with your pricing and make sure you sell and blah blah blah. None of that. This is just if you look at the theory of 4-year cycles, here's how it kind of works. The same thing happens with stocks. So that's the reason why I overlaid that purple line. So with stocks, the cycle obviously doesn't anchor around the Bitcoin halving schedule because it has nothing to do with it, but it usually anchors around the presidential election sort of system, which is also a 4-year process in the US. So you can generally see like the bull markets for the stocks usually happen in the sort of final year before the elections take place, because I guess the departing administration wants to make everything look as good as it possibly can, so that they get re-elected. And then usually like the worst performing cycle, the worst performing part of the cycle is, the year after the election when they've got, they're already in, they're not going to get unelected, it's too late. And so, yeah, it's kind of interesting because these two things do exist. If you look at the purple and the green and red sort of two different lines here, you can see they're kind of apart from each other. Obviously, these scales are different, so you can't measure them directly to each other. But you can see that they're getting closer and closer together at the moment. So previously, there was quite a bit of distance from them. And, the Bitcoin bear markets were deeper than the SPX 500 bear markets, which kind of makes sense because, the market caps are orders of magnitude different. But as the market cap of Bitcoin gets bigger, we're kind of coalescing, we're kind of converging on the SPX sort of, volatility maybe, and the action that they're displaying. What does this suggest to me? Possibly that as each halving goes past, as some of you may already know, because the reward gets halved, it means that the effect of the halving is also halved, right? There's half as much Bitcoin getting rewarded, sure, but the amount of Bitcoin getting reduced in the reward is half as effective because it's getting smaller and smaller, and the amount it's reducing by is halved each time. So the effect of this halving is going to get less and less as years go by, and maybe the Bitcoin cycle will start converging on the normal stock cycle. Just as a thought, I don't know what's going to happen, but possibly that's what we're seeing play out here. Something else people often talk about is a super cycle.
I was going to say, when are we going to move on to the super cycle discussion? Hey, Jared, with the vid, there we go. Oh, is it possible to get the chart but just kind of have it squeezed maybe between us? Yeah, let's do that. Yeah, the super cycle thing. Okay, so there we go. So each cycle we have this conversation. Oh, it's just, there's this thing in front of me. Put it, mate, just stick it up there. Oh, there we go. So each cycle, we always end up getting into this sort of super cycle theory. And people come up and the height of last market cycle, we had the guys, 3 Hours Capital, talking about the same thing and famously basically said right at the top, super cycle is going to last forever. Is this time do you think there's sort of any difference this time? I mean, the biggest thing from my mind is we have treasury companies and ETFs now, which we didn't have previously. Is that credible enough? Is there enough flow from that the impact of kind of a blow off top would be mitigated? Or is it, because we're going mainstream now, we've kind of hit maybe some escape velocity to kind of get past all this stuff? Or will it mean, I'm just kind of throwing out ideas here, or because I guess we haven't seen quite the exponential run-up we have seen in previous cycles, that maybe, this time we'll see more of a gradual ascent. Like, yeah, what do you reckon?
Yeah, I think there's a lot of arguments for why this might be different this time. Having said that, there are arguments for why it's different every time. So I'm not going to be foolish enough to be goaded into making a prediction that whether this time is different or not.
The internet never forgets, Nick. It's waiting for you to say something stupid.
I'm not going to do it. But I'm preparing myself for all outcomes. I think the smart thing to do here, and again, not financial advice, this is kind of just what I'm thinking in my head. But as we approach the historic end of the bull part of the cycle, which should be sort of around the end of this year sometime, and historically, it's sort of been within about a month of each other. So within those 3 to 4 weeks period has been historically, where the bull market, where the top has printed. That's kind of where I'm going to be looking to sort of do my trading, I suppose. So if I was to, if the things are playing out and it's looking like it's rising and it's going in a good direction, then maybe it's time to trim some profits and trim positions or whatever to try and take advantage of that. Is it going to be, if it's a super cycle, then the price just keeps going up, or it just never, maybe it drops a bit, but then it just keeps printing new highs every 6 months or something like that. We just don't know. And I guess by sort of, early to mid next year, we'll have a much better idea about, whether it's true or not.
Yeah. Hey, over the last cycle, I mean, there seemed to be these external events that just coincided with perfect timing. You know what I mean? Last year, everything was aligned, and then right as things were getting bad, all this bad news started coming out. It was as soon as the end of the 4-year cycle was due, all of a sudden we had Terra Luna and FTX, and all these things started just 3 Arrows Capital, all these terrible things just started happening. I mean, is it coincidence? What is it about the timing of these things? Because it seems like all the good stuff happens in the 3 years, 4 year, all of a sudden something starts blowing up.
I think it's, it seems like some kind of alien force is controlling the markets, and it's fun to sort of think about that, I suppose. I reckon that I totally agree with you. It does always seem like there's some reason for prices to go up. It's not, they don't just go up on their own magically. There's always some driving force, which makes you think, well, what if next time there isn't that driving force? And I guess the same goes for the downward, price pressure. There's usually some kind of driving force. What if there isn't next time? Look, I think, the whole thing behind cycle theory is, and the whole thing about any kind of technical analysis when you're looking at charts for whatever asset that you're trading, it's based on the psychology of the human brain, right? We'll see something go up for a period, and then there'll be just and it's this self-fulfilling prophecy. Yep. So while I think, yes, there's definitely catalysts in the market that cause these price movements, they're kind of like force multipliers. In last cycle was, the second prices don't keep doing what you're expecting them to do, everything does crash, you get liquidated. And so it was kind of like a self-fulfilling prophecy where the prices were going to go down. It was never going to be a super cycle. And so, it feels like this external event caused the crash, but really maybe the crash caused the external event. You know what I mean? And it wasn't a crash at the start, but it didn't need to be a crash. It just needed to be a little bit off the top. And that's all it needed for the house of cards to fall over on. Yeah,
totally. Hey, I don't know if we can pull it up in time. There was this cycle theory's been around for a while. So if you pull up a Gantt chart, the Gantt chart, GANT, and so this guy had been doing cycle theory. So if you pull up a couple of images on, we'll get to a second. Maybe just go to images for a Gantt chart. What was his name? And the idea of a Gantt chart has been around, but this guy.
Do you used to do Bitcoin Gantt chart?
Not crypto. In Gantt chart in just economic side. Guy, he was someone Gantt. We'll pull it up in a second. It's not there. We'll find one here. But basically, this guy was picking a bunch of different, he predicted out for 100 years. And he was kind of picking, basically there's a cycle theory in all markets, and you can just kind of base it on time. Things go up, things go down. And this guy did it about 100 years ago. Maybe I've got his name wrong. I've got to try and find it. So if you just look at chart theory or something like that, economic cycle theory, it's hard. The internet has so much junk on it these days. But it was kind of saying that every 4 to 8 years, there was kind of these mid and bear cycles. And he put basically on that chart, if you look at it, I know we'll try and pull up in a second. We should have probably had a look before. But it showed that in 2008 there would be a giant economic crash. So there'd be these like mini ones and big ones. So it gained a lot of popularity back in 2008 because everyone's like, oh, this thing that was made 100 years ago, it predicted this cycle. And I wish I can't remember his name. It doesn't matter. You'll see it's like, just like have a look at prediction for like, it's like from 1920s or something. It was crazy. It's this awesome looking chart. What was his name? I'm sure his name was like Charles Gantt. There it is there, the second one. Periods when, there we go, this one here. So we'll pull this one up in a second. Maybe it is a kind of Gantt chart. I'm pretty sure his name was Gantt. And the reason we call Gantt charts like the ones you sort of see in Excel and all that kind of stuff, Gantt charts, is because of this guy.
Yeah, right.
Here we go. Oh, the Benner cycle. Sorry. Number one source of mislabeled charts. These cycles are purely just based off time. And we can ascribe all kinds of events to those particular events. But in reality it's just this kind of natural cycle that happens in human societies.
That's interesting. 2019 on the chart was not a good year for crypto, and it's meant to be boom. But maybe this sort of flows into the whole, crypto has its own cycle at the moment, and it'll eventually converge with the general grander macro stuff.
So just based on that chart, Jared, when can we expect some doom?
2032.
2032.
Or 2023. But
Wow, there's a lot of doom between there.
Plenty of doom. Anything bad in 2023 and 2022 when the markets crashed?
nothing.
Yeah.
It was on the way down.
It was on the way down. Duh.
Periods when to make money.
It's kind of on the money, I guess. 2023 was supposed to be a bad year. 2022 was the bad year. We're only a year out, and this guy put this together. This guy cooked this up in 1924.
He's done all right.
Yeah, done all right.
He's done all right.
All right, we'll jump onto that. See if the Benner cycle has anything to do with it. Well, thanks for that, Nick. I guess we can jump into some of the news then. All right, so this week on the OTC desk, as I mentioned before, some of the CPI stuff is definitely sort of, I guess, created sort of easing of market conditions, but not quite the numbers that we were looking for.
I think everyone was really expecting.
We wanted some
good
big
stuff.
cuts, yeah.
And so when it's not bad news, but it's not great news, and everyone's like, oh.
And so I guess we saw Bitcoin and ETH relatively just sort of trading within their ranges. And the moving average for Bitcoin has still certainly been trending up. The Chinese sort of bank lending numbers came in a bit, not a bit average, but again, not terrible. And Trump, I guess, was, didn't strike a deal with the Russians either. So all these things kind of weighed on sentiment to be like, it's just, that's the vibe we're getting.
Yeah, it's not good news, so we're gonna do a little dump. But it's not really a dump, right? As you say, we're kind of still in this range. We popped out of it for a second there, got all-time highs. Everyone got a bit excited, and then we're like, no, let's settle down back inside the range.
Yeah. So I guess looking ahead, we've got some stuff that's happening here. I guess locally we saw the RBA cut 25 basis points, which is great for the local market. I guess overall the Australian market doesn't have a huge influence on the crypto market. The overwhelming majority of crypto still trades in USD, so what happens in USD still makes the most difference, and in the US, of course. But still, US spot ETFs have been absolutely pumping still. ETH ETFs in particular have been took in nearly 3 billion.
Yep.
It's just crazy. Again, so we would go back to 2022. Hey, we got an ETH ETF that's taken in $3 billion a year. Could not believe that such an event would occur. But here we are, and we're like, it's whatever.
Yeah.
Oh, just be bored now. Can't even get a smile out of Nick for it.
It's
the ETH Whisperer doesn't even
record
care.
intake, and it's sort of no one's really talking about it. But I guess no one's talking about it because the price is kind of languishing at the moment. Anyway, I think we'll talk about that in a sec.
We all become so basis orientated, and so as soon as we get a new all-time high, anything below that new all-time high, it just doesn't excite us really.
I mean, we haven't even got the all-time high in ETH pricing, right? We've got an all-time high in ETF intakes, but no one cares about that. They want to pump their own bags.
Yeah, exactly. But funny enough, okay, so if we get into some of the technical stuff for the week, so the Ethereum validator queue. So there has been a queue, which, there's a lot of people trying to get their way into the validator queue, which I guess you're going to explain to us what that validator queue is and why we should care about it. But I guess broadly speaking, if we take a step back from that, I guess, the gas fees still remain surprisingly low. So I guess if we take a step back, what did that really tell us? It's the network is scaling, but it's actually still scaling bit slower than we'd probably like.
Yeah, there's a few concepts you've touched on there. So validator queue, when you want to stake Ethereum and you want to earn your 3 or 4% yield or whatever it is from helping the network validate transactions, you can't just sort of dive in. You can't just dive in and start, just be a validator kind of thing. The network has these rules in the protocol to say, look, we're going to let people come in an orderly fashion. So if there's no one in the queue, sure, you go straight in. But it's not just going to sort of open the floodgates and go, okay, suddenly there's now 3 times as many validators if that's what the demand is all of a sudden for whatever reason. So they have this queue system where basically they let in a certain amount. It's like a bottleneck. They let in a certain amount of new validators come on, and everyone will get their turn eventually. But they just want it to happen in an orderly fashion, so there's no sort of surges or spikes in the network. And exactly the same thing exists on the other side. So if you want to stop being a validator, you can either just turn your validator off, I suppose, and then you get your Ethereum slashed, and that's a really bad thing. You don't want that to happen. Or you hop into the exit queue and you wait your turn, same kind of thing. And eventually, for the same reasons, I actually have people asking me about this recently. So is the fact that there's a queue a way to help dampen the sell pressure on Ethereum? No, it's not. It wasn't. That's not why it was built. It was built purely just as a way to manage, the validator size, the validator set size, and make sure that there isn't some really sort of volatile numbers. Suddenly it's really high and there's heaps of validators. Suddenly there's like only 3 validators. They want to make sure it's very orderly.
Yeah. And that's to help with the block block processing times, because you don't want to have like overly too many validators and not underly enough validators. Is that what they?
I don't know if it has anything to do with the block times because we're not in a proof of work system anymore. It's a proof of stake system. So
I just mean to. Oh, sorry. You explain.
Yeah. So like with proof of work, that's exactly how it happens with chains like Bitcoin, where the less miners there are, the longer theoretically it'll take to mine a block. And then they've got a thing called the difficulty adjustment, where if there's not enough, if the blocks are taking too long, they'll make it easier. So the smaller amount of miners can mine it in the same amount of time, 10 minutes a block. But in Ethereum, because it's proof of stake, I don't know if it works the same way. I think the validators just they submit their block basically to be transacted in every 12.5 seconds or whatever the network will allow it to go through. Yeah, it's more around sort of like if you have these spikes, you can get anomalies in the finality of blocks, and it gets very technical. Ethereum is such a complex system now. It's very simple for me to explain the Bitcoin side of it, but with Ethereum, there's just a million things. But yeah, all I know is that basically it is not to dampen price swings. It is purely to dampen finality and liveness kind of metrics to make sure that the network is all good. Okay. You also touched on what did you touch on? The fees at the moment. So yeah, I think that's quite interesting because the fees right now are super low, but we are actually at basically all-time highs for transactions going through the network, which is pretty amazing. So I don't know why that is. I guess like everyone's getting on top of Ethereum at the moment. It's becoming back in vogue. I suppose DeFi's going nuts, but the fees are still low. Why is that? Well, I don't know. To be completely honest, there's a lot of people talking about how this is the Ethereum scaling is happening. It's working. So there's been a lot of work. A lot of these EIPs that we've spoken about in the past, these hard forks in Ethereum have improvements in there to help fix and make scaling better and make the network scale better. And I guess it seems to be working if that's, like the fact is we're basically really, well, not all-time high transactions maybe, but at the moment we are right up there, like the highest we've seen in years, and the fees are still like less than one Gwei, which is amazing. It's very cheap to transact.
Okay, is that going to be a problem then for the security budget-ish, I guess, of Ethereum and people? I guess not, because people still want to get in there and validate and.
Yeah, I mean, it's the security budget's different sort of Ethereum because it's much cheaper to be a validator. In Bitcoin, you're actually having to spend electricity, and you've got like this capital up, like this, capital costs, upfront costs to purchase the miners and whatnot, and maintain them. But in Ethereum, you do need a computer. You need like a solid internet connection, You need a lot of storage space, but storage is cheap. Internet, these days is pretty pervasive. It's much cheaper to be a validator. So I don't think they don't really have the security, concerns that Bitcoin may.
Gotcha. Well, so is there a connection between, I guess, the low fees and the rewards for staking?
Yeah, there's a correlation there, and the percentage of the percentage yields that you earn as a staker is a dynamic value. It's not fixed. And it'll go up and down depending on lots of different factors, including how many validators there are, including how full blocks are, how expensive things are.
Well, I'd like to say I'm not concerned, Nick, but if the ETH Whisperer is not quite sure why the gas fees are low, a sense of eerie uncalm is taking over me.
I mean, I only really look at the Ethereum gas fees. Of course, Ethereum at the moment, it's not just Ethereum layer 1. There's all these layer 2s that sit on top of it. And they're doing a lot of transactions on those layer 2s as well. But I guess the thing is, the tricky part here is that even if a layer 2 has, a shitload of transactions, they're doing a lot of stuff, it doesn't really translate to the layer 1 fees. So the layer 1 does get paid fees for these layer 2 transactions, but they're pretty small. Like they don't scale as you might expect them to.
Well, either way, I think we touched on this before, but let's dive into it just to quickly wrap up the numbers for the ETF inflows, because we're still sort of seeing huge amounts. So regardless of the on-chain activity, there's just so much buying pressure for ETH in general. The ETFs are buying up stacks, Bitmine and also Starlink and a few of these other ones, Sharplink, are still continuing to gobble up what they can.
Yeah. And this kind of does play into what we were talking about before. So at the moment, there is an all-time high queue to exit the validators. Something like 900,000 Ethereum sitting there waiting to get out. Why is that the case, and yet the Ethereum price keeps going up? Or, ignoring the last couple of days, it's been pretty much trending upwards for a while now. I don't know. Like I guess what we're seeing here is, a fight between the bulls and the bears. The bulls are the Tom Lees buying Ethereum for their, companies, and the latest Tom Lee Bitmine announcement about buying $20 billion worth of Ethereum or something like that is just crazy.
Can we even look much into that, or is that just an announcement to grab?
It's an announcement. They haven't done it yet. They still need to issue. They're issuing shares to pay for it, obviously, diluting their shares. But there's all these big companies that are doing this kind of stuff, and they're offsetting at the moment basically any sell pressure that comes from the exit queue. Now, the exit queue doesn't mean people immediately sell. All it means is they've stopped validating and stopped earning yield. They could then put that Ethereum to some other use somewhere, and they might not actually sell it. So I don't think we can say that there's 900,000 ETH sitting there waiting to be sold. I don't think that's fair. But it's interesting how there is the biggest all-time exit queue, and yet the price is still so high. And until a few days ago, was basically climbing. It's
outrageous. I mean, even at the moment, you kind of need to just say outlandishly crazy things, almost grab a headline, because there's so much stuff coming out, and just like Trump just dominates the headlines. There's no such thing as a news cycle anymore. It's just what Trump's doing on a day-to-day basis. And so if you want to get any sort of headline, you need to say something absolutely gobsmackingly stupid or just outlandish. I'm going to buy $8 godzillion worth of ETH.
I wish
just make up some number that doesn't even exist to try and get a headline.
Anything not to release the Epstein files.
I think if you'd done this 20 billion announcement and done one of these ones, I think we're...
You do know that 20 godzillion is not a lot of money these days.
Yeah. I had one more thing to say on this.
Make it outrageous so it can...
Yes.
Actually make a headline.
It is kind of outrageous, actually.
Really?
So... ETH to 10,000. So what was it? Solana to $530? No, not Solana. XRP to $530.
Well, Solana's also been doing very well this week as well.
It's working its way up. I mean, up until, again, I'm going to keep saying this all podcast, up until 3 days ago or something, it's been doing great. The Bitmine thing. So what I thought was kind of interesting is that recently, So people generally expect these strategy style companies, these treasury companies, to be like a multiplier for what you're putting in. So you're putting in, 5 ETH worth, they buy 5 ETH, but the price goes up by 6 ETH, if you know what I mean. But interestingly, if you look at the Bitmine thing, they the last time there was a price movement that was sort of correlated, and Ethereum went up 6% and Bitmine went up 5%. So it actually went up less. But you got to sort of take into account there's a bunch of priced in news, like this whole $20 billion sell. The price went up 14% just off the news. So then that still has to be digested by everything. What else were we talking about? ETFs. So the ETF.
I think you're going to say something outrageous.
No, this was the outrageous thing. It was outrageous to me anyway. At the moment,
prepare myself.
ETFs own something like 5% of, 6%, 6.4% or something like that of the Bitcoin supply, which is pretty big. Like they've just been gobbling up Bitcoin forever. Ethereum ETFs are up to 5% of the Ethereum supply already, and are set to overtake the Bitcoin percentage by September, by next month.
Really?
Yeah. That is outrageous.
That is outrageous.
The Bitcoin market cap is 30 times that of Ethereum. Okay. So it's a lot easier for ETH bulls to buy up a percentage of the market cap, but it's still crazy that this is happening, and we're still not at all-time highs for Ethereum.
It's crazy.
We're still under all-time highs. Can you believe it?
That's pretty outrageous. Now, one of our favorite listeners, Dan, you know who you are, Dan. He told us, he said, I always listen to you guys when I'm out on running a treadmill. So Dan, I don't know if that was enough shocking news to make you fall off your treadmill, but I hope it was. Maybe Nick will come up with something better later. Like, if you're still on your treadmill, I'm sorry.
Well, he listens to the show after we've done it live, so I can get him to maybe set up a camera, because he won't know what's coming. So we can maybe film him falling off his treadmill.
I can only measure this shocking news by how much Dan falls off his treadmill.
How many times, Dan?
All right. Well, if you're still listening, Dan, I'm glad you're listening in. So, okay. Well, here we go. So, strategy. So, we've talked about this on a number of occasions, and everyone's favorite topic is strategy. That is Michael Saylor's strategy. And whether, I love it when people talk about Bitcoin being a Ponzi, or the definition of a Ponzi is something we'll get into in a second. But people always ask, is it Ponzi? Is it a Ponzi? Is it a Ponzi? And we have to address this, because people always want to talk about it. And it's just like this 2017 thing, which has been dismissed many times. But, okay, so this week, Strategy bought another 430 BTC, but backtracked on an earlier announcement that it would not issue Strategy shares below a 2.5 times NAV.
Yep.
So net asset value, which is the Bitcoin amount per share. So a debate has erupted apparently on X and on another podcast, What Bitcoin Did podcast, over whether Strategy is a Ponzi scheme because it pays new investors dividends from the contributions of later investors.
Yes. Yeah, there's a lot to unpack there.
A lot to unpack there.
Yeah, so basically, if we sort of give a bit of background for this one, Strategy announced, I think it was the 31st of July, so not long ago, 3 weeks about, they said, look, we've been doing a lot of sort of issuance to the market. We buy a lot of Bitcoin, as everyone knows. What we've decided to do now is that when our shares are worth 2.5 times what our market cap is, basically what the what's it called, the EV of the company, then we only then are we going to be issuing more shares to the market and diluting people's shares, because the second they send out more shares, even though they're buying Bitcoin with the money that they raise from those shares, they bring the MNAV down. That drops the MNAV. It brings it more into line. It should, in a perfect world, it should be 1, right? Yep. The value of the company should be equal to the value of the total shares issued, kind of thing. But at the moment, it's worth more. And he said, look, only when it's worth 2.5 times or plus 2.5 times more or more, will we be sort of trying to dilute it. Then, a day ago, so less than 3 weeks later, he just out of nowhere announces, oh, by the way, we're kind of not doing that anymore. And that's very disappointing, I think, to a lot of MSTR bulls, or people who kind of feel that Saylor is very measured and doesn't sort of waver from his, and he's shown this in the past. Doesn't matter if we're running in a bull market or a bear market, he just keeps buying. He doesn't care. He doesn't sit there and worry and fret over, prices. But now he's kind of like, he made a big announcement, which seemed kind of interesting. They're like, okay, we've bought a lot of Bitcoin, so we're only going to be buying Bitcoin now when we're like way overs. And then they've decided to sort of walk back on that. I didn't really like it.
But is it really an issue? It's a public company. It's fully disclosed. It's not like it's doing anything.
They're not doing anything illegal. No, by any means. And so to be fair, the fact that they should really be issuing shares, I suppose, with this strategy that they have. As long as it's over one, they should be diluting the market, because if it's over one, it's worth more than it should be, and they can dilute the shares and buy more Bitcoin. That's the whole purpose of this company, right? I totally agree. But I just didn't like the fact that he came out with this thing and then so quickly changed his mind. Like, how much thought went into that first thing? What happened in that, the interleading 3 weeks that made him suddenly change his mind and decide that thing that they said before was a bad idea? Right. I'd love to know I'd love to be on the fly on the wall when that decision was made to kind of backflip on it.
The guy's an engineer. He's a rational dude. He's clearly a very intelligent guy. It's not like he would make a rash decision, would is it?
Well, that's the thing. Historically, he really hasn't been making rash decisions. He's made some calls that have been wrong over the years. I saw a stat recently that apparently, and I haven't fact checked this, but apparently he was the biggest loser in the .com crash. He lost like $6.8 billion in one day or something like that. When he, understated his losses, and blah, 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 and things weren't very good for him. But I don't know. Look, I didn't like the way that sort of played out, and I'd love for him to come out and say, look, this is what happened, and sort of apply a bit of calming presence to the market for that stuff. But yeah, then you wanted to talk about a Ponzi. Shall we get it? Shall we dive into that?
I feel like the Ponzi discussion is something that's been debunked many, many times.
Well, for Bitcoin, I agree.
For Bitcoin.
For strategy?
But the criticism that has been thrown at least Strategy's way is that, it's a Ponzi scheme because it pays new investors dividends from the contributions of previous investors. I can see why they're drawing that kind of parallel.
Yeah.
But is it granted? Is it fair? Is it just...
I mean, the definition of a Ponzi scheme involves things like, what did I write down? Yeah, sorry, like promising fixed returns, guaranteeing kind of returns. And I mean, obviously, Saylor, like the MicroStrategy company's been around for a long time. It's regulated by SEC. All eyes are on it. Like, it's not going to get away with stuff like this. So, no, it's absolutely not a Ponzi. It's not a Ponzi in the illegal Ponzi definition of the term, where Ponzis are actually illegal, But there's a guy called Hyman Minsky, who is like an economist from the 70s, and he wrote a bunch of stuff. And one of the things he kind of defined was a Minsky Ponzi finance. And the idea behind this is that something is a Minsky, like a Minsky Ponzi, if it does exactly what you said. So it has to pay its interest or dividends or whatever, it has to either issue new debt or sell assets. And if you're in this kind of, if you're invested in this kind of financial scheme, then you're involved in a Minsky Ponzi. And it definitely seems closer to that kind of definition. So yes, they are. This always confused me, and I'm not sure if we spoke about it a few weeks ago, but when I discovered that Strategy were issuing these shares that paid yield, I was immediately like, the question marks came to me. I was like, how do they pay the yield? Like, are they selling Bitcoin? I don't think so. I think famously Saylor doesn't sell Bitcoin. Are they earning enough money from their software business to pay this yield? I don't think so. Software business kind of runs itself, maybe. I don't know if it makes much profit anymore. So where does this money come from? And it can only come from the new players who buy. So that's I can see why people are talking about Ponzi's, and it is an interesting discussion. The company itself, I don't think, is a Ponzi. It doesn't promise fixed returns. It doesn't. It's not doing anything illegal.
But the structure itself is effectively doing that.
Well, the structure itself is in this Minsky Ponzi kind of.
Oh, that's concerning, Nick.
I mean, and
I hope you're not the strategy whisperer as well.
I don't think. I don't think Saylor's going to run off into the sunset.
Where's he
I
going
don't think he's going to run off to the sunset with money.
No.
But
He's a Hyman whisperer.
yeah, oh god. But I think like anything, when the music stops, we will see a crash, and maybe it'll go through its own cycle.
This is the big thing.
It's a leverage play in the end, right?
As you were famous for quoting, you either live long enough or you die. I've already messed this up.
You always mess it up every time.
This is not the first time I've messed this up. You either die the hero or live long enough to become the villain.
Yeah.
So does that mean Sailor of all people will become the villain?
He's on the pathway. Doesn't mean
That's
he has
concerning.
to be. Doesn't mean he has to be.
He doesn't have to be though.
Doesn't have to be.
But if he doesn't become the hero, that means he has to live long enough to become the villain. So that means he has to die.
You saying you're going to kill him?
Hmm.
Is that what's happening here?
Not me personally.
Yeah.
No.
Pay
But
for someone.
oh no, this is either way. It's not necessarily good news. I can't see a good way out of this.
This is not financial advice.
This is not good news, but it's not financial advice either. Let's change topic before we get ourselves in trouble, because I'm sure there are a bunch of Sailor fans out there who are just like, they'll defend him till the end, and we've just made another 1,000 enemies.
Yeah,
we came on here.
If only we had that many people watching the show.
just like the time when you ripped into the XRP army, and then you ripped into Trump. And
yeah.
You never got stuck in the XRP army. You just got stuck into Trump.
I did do a bit of Trump.
And the XRP guys came after you.
Yeah.
Someone's always after you, Nick. All right, so the next one. So there's a 51. Okay, so this is actually kind of interesting. So there was, and this is theoretically at least interesting, definitely for Bitcoin, because this has been sort of thrown out there for a long time. I think Bitcoin is so large and so the network is so secure that it's almost inconceivable that there's physically a way for this to happen. And even if they did happen, it would be so prevented. But there was a 51% attack on Monero.
There was
in the news.
There was a
mining pool, an attempted. They reorganized a few blocks.
Yeah.
So I'll quickly go on out of the background just for the listeners. So Cubic, a mining pool, claimed to have mounted a successful 51% attack on the privacy blockchain Monero, which is a proof of work network, and they conducted a 6-block deep reorganization.
Yep.
However, I guess not necessarily a heap came of that, but which we'll have to talk into. That's where you're going to provide some insights, I guess, as to what actually came of it. But interestingly enough, after we talk about what happened there, the community has then voted to attack Dogecoin next.
Yeah. I mean, the pickings are slim, right? How many proof of work networks exist these days that it's actually worth attacking? It's kind of, there's not many others. Like, what do you got? Litecoin? You can go for Litecoin next. Yeah, this is a kind of an interesting one, and I'm going to do a few hot takes here.
Strap yourself in. Hot takes are coming.
For anyone who follows Eric Wall or knows me, Eric Wall is the Lord and Savior. He posted a couple of interesting notes about this. So the guy who runs Quebec, if that's how you even pronounce it, I don't know. He is this guy called CFB, Come From Behind, I think is his Twitter handle.
Oh dear.
Yeah, or Come From Beyond, sorry, Come From Beyond, yeah. Make sure we cut that one, Jared. Yeah, Come From Beyond. Anyway, I might even be wrong with that, but CFB is kind of what people call him. He was actually one of the original founders of a cryptocurrency called IOTA, if you remember.
Oh yeah,
IOTA.
I remember IOTA. Yeah, I do, absolutely.
Yep, I used to be a bit of an IOTA bull. Yeah, that was a long time ago. I learnt my ways. Anyway, Eric Wall always didn't like IOTA, and as far as I can tell, he was absolutely correct. Like most things that he talks about, seems to be.
Sorry, I'm going to interrupt and just digress. Eric Wall. I like Eric Wall's stuff. I listen to his stuff as well. Well, thanks, Jared. So I've completely hijacked this train of thought. But seeing as we're talking about Eric Wall, one of my favourite ones was the stoushes, the public stoushes he had with Richard Hart.
Yeah, there's been an update on that recently as well. I'm sure you've seen.
Which I know you're going to have an opinion on this, which is why I wanted to jump into it, because after we do this, let's just go on an epic Eric Wall tangent and talk about the various stoushes he's had with various chains, including Cubic and
Pulse
Chain.
chain.
Yeah, because there has been some updates there.
Yeah. Well, the Pulse chain one's a bit sort of lowbrow, but we can get into that.
Oh yeah, because we are up here in our ivory towers.
Oh, yeah, that's right.
Speaking in your towers, you know,
are we going on another tangent?
Absolutely. Someone asked me. He goes, I've checked out the podcast of what's the vibe you're going for, and I was like, that's a great question. Because it's like, who are we going for? Sometimes I feel like because we're so old, a bit like Stadler and Waldorf from the Muppets. Just two old blokes just yelling at people from our...
It was terrible.
Yeah.
It was fantastic.
I'll grow my eyebrows out for it. Yeah. Okay. So back to the story at hand. So this guy the guy who runs Cubic was one of the founders of IOTA, and that in its own is like a roller coaster of a story. He was the like CTO or whatever, the tech guy, and eventually everyone realized he had no idea what he was doing because he was claiming that they were going to decentralize the network for literal years. Nothing ever happened. He eventually got kicked out, but the guy who kicked him out, his other co-founder, got kicked out as well because everyone in the community was like, hang on, that guy's been basically covering for this guy's nonsense for years and claiming that he knows what he's doing and he has no idea. Anyway, so that the first guy, CFB, started this pool called Cubic. They've got their own coin. As is with any kind of financial system, they've figured out how to, the game theory has figured out how to make it the most efficient as possible. So basically what they do is they offer kickbacks in their Cubic coin if you come and join their mining. They basically incentivized miners in the Monero system to come and mine in their pool. And when you mine in someone's pool, the pool operator is the one that chooses what to do. And so they got some kind of quorum of miners and were able to do not a 51% attack. So this was theoretical, like they called it a 51% attack, but then someone actually looked at the numbers and was like, you guys got about 34% of the hash rate. But that's all they kind of needed to do a six block reorg. I think the fact is and it sounds horrible, right? So it's like, oh my gosh, Monero, the biggest, privacy coin there is. It's like been around forever, and it just got reorged by. Reorg basically means, if you don't know, when you have like blocks, if some bad actor comes in and decides to go back in time and change the blocks, which is usually bad, right? Because if you do a transaction, you go like, okay, cool, I pay Lee 50 Monero, for example. And if someone reorgs the blockchain, they rewrite history, and maybe I haven't paid Lee anymore. So that's it's not good for the network. It's definitely instills, bad vibes. But they reorged it. But the fact is, Monero's security budget is about $150,000 a day, which is tiny, right? Like it's Bitcoin's is orders of magnitude bigger. Like it isn't too difficult to reorg the Monero blockchain. On top of that, the way they've done it is they specifically the algorithm they use for hashing in the mining protocol is specifically against ASICs. So ASICs, which is what is used in the Bitcoin mining protocol, the ASIC computers can't really do Monero very, very well. And so basically it's actually quite cheap to hire compute power because you don't need to hire ASICs. You hire normal computers basically.
Right, just CPUs.
And you can, and so they've done this thing that it's to be honest, from my mind, it's more show than anything to get Cubic in the news. Meanwhile,
you got to do something because Trump's going to take those.
Yeah,
headlines.
Exactly. You got to get your head above the water somehow. Anyway, so it was mostly a non-event. They reorged 6 blocks. They had 34% of the hash power. They didn't get a 51%. Yes, they did something. It wasn't great, but I mean the miners would have lost like $1,000, $2,000 in fees. It's nothing crazy. But basically it's this guy being a bad actor all over again.
All right.
He's a bad actor in IOTA. He's a bad actor in like Cubic. Seems just to be a bad actor altogether. They're now targeting Dogecoin.
Just one of these perennial jerks that just go around just like picking fights with people.
Yeah.
It's one of those streamers who go around doing shock jock stuff, I guess.
Yeah.
Just annoying people until someone goes and beats them up.
So that's right.
Nick,
so
what are you going to...
Yeah, right. I'm hopping on the first plane.
Yeah, Nick, you get on him. What about Dogecoin? Does Dogecoin even care? This guy's just being annoying.
I mean, he's...
is that him?
No, it's just a douchebag.
Oh.
Putting it up for reference.
Yeah, put him up, throw it up quick.
No, that's not him, right? It's pointless.
Throw up a generic douchebag and we can...
Generic douchebag. Here's what it's like. That guy's like, oh, imagine if he was watching.
Oh, no.
I doubt
no.
Jack Doherty is watching.
I don't know who that guy is.
Yeah.
Look him up.
Anyway, that was weird.
You just can imagine the kind of guy who was up there just annoying people.
He's probably a really nice guy. Maybe he's not. Okay, maybe he's not.
According to Jared, Jared's jerk.
He's part of the Jerks Are Us consortium, and he's the leader.
He does IRL streaming with a giant 7-foot black bodyguard, and he goes and starts fights with people that are bigger than him. And he runs off, and the bodyguard takes over.
Oh,
gosh.
jeez.
Okay. Again, this is just like he's just trying to get the headlines from Trump. How can you blame him?
Top shelf jerkery. All right, get him off our screen. He's annoyed me already. Hey, well, no, we digressed into Pulse Chain, but then we never actually fully segued into it.
So we okay. If
Eric Wall.
miners are listening, you might no, it's not that bad. Yeah, so Eric Wall's had this long-standing fight with the Pulse Chain guys, and Pulse Chain is this chain which is literally a copy of Ethereum. Oh no, was it Ethereum or is one of the either Ethereum or maybe Polygon. And basically they copied it literally like for like. So if you had a wallet in Ethereum, you would have the same wallet with the same tokens in Pulse Chain, as far as I know. And there was all this nonsense about how, like, you know, USDC on Pulse Chain, even though it was literally duplicated from Ethereum, so there's no basis, you couldn't redeem it at Circle, would eventually become worth the same amount as USDC on the mainnet, you know, $1. Complete nonsense. This will never happen, or if it does, you know, I'm selling all my crypto and leaving the industry because everything's over. But so Richard Hart is sort of like this serial grifter. He's been doing it for years. He's very good at what he does. If you're looking for like,
he's hilarious to watch. You have to admit, he's absolutely
I love
hilarious
watching
to watch.
him debate.
He's clearly really intelligent guy.
Very smart
but
dude.
He knows what he's doing.
100%.
And the Hexicans who follow him, like he does. His
He's
whole
like
shtick
a
is
cult leader, right?
Yeah.
He's super charismatic, really good at talking. I love watching him debate. He debates anyone. The only person I've seen who he hasn't basically beaten in a debate is Eric Wall.
Yeah.
Surprise, surprise. This is Richard Hart on the screen there. That's sort of, I think he's a lot fatter and hairier now,
and he's always dressing up in that, absolutely going and just spending heaps of money on like this designer stuff. And you've seen
like
the cars
really
with him.
Outrageous
Outrageous
nonsense.
stuff. He looks outrageous, and he does it deliberately to sort of
Yeah.
shock people into looking at attention to him.
Yeah, look, this. Okay, you can't see, but he's got like this watch collection he keeps showing off.
Yeah, and it's worth millions. And
it's like, where do you get this money from? Oh, all the people who are following him. Yeah, you've
Following
basically
you.
stolen their money. Anyway,
Yeah.
that's not the point. So he built this thing called Pulse Chain. It's a complete nonsense network. It's like technically bad. He's got like 6 developers looking at it or something. It's just not enough to maintain an entire network that's super complex like Ethereum. There's a lot of Eric Wall has had a long problem with this and constantly in the past posted about how the glaring issues with this network and how it's being run. And obviously, like, he incites a lot of ire from the Pulse Chain and Richard Hart followers. One of the big Pulse Chain people is this lady called HiveX or something like that. And a while ago, I guess about maybe 2 years ago, he had a bet with her that some token on the Pulse Chain network would never exceed, and I'm guessing here, I can't remember, called it would never exceed like $26 or something. Yeah, and anyway, and she was like, okay, we'll bet you $10,000, and he was like, okay, fine, we'll bet $10,000. Like, where do you want to escrow? And she refused to escrow, and he was like, fine, whatever. And then the chatting got on, and she was like, you know, I wish I'd known he was serious. I would have bet 50, and Eric Wall was like, fine, let's do 50, or 60. I can't remember, 50 or 60, can't remember. Anyway, like, so the bet escalated to this big number, and then he's like, I tell you what, if you're so confident. If I win, you have to send me. And she's like a good-looking girl. She's posted these photos of herself with these Pulse X underpants, right? And I don't know if it's like a full undie shot. I think it might just be like she's wearing jeans and she's like pulled up it's got like Pulse X written in like diamantes and whatever. And and he said, look, if I win, you have to also give me the undies. And she's like, fine, because she was so certain, like as all the Pulse X and Richard Hart people are, that she was never going to lose this bet. Anyway, 2 years happened about like a month ago, and so he's now collected in on this bet. She has sent him the undies, so he's got these undies from her. It's just like. Yeah, is this a simulation or is this real life? I don't know. But she can't pay off the bet, so she doesn't have $60,000.
Oh, really?
To no one's surprise, because obviously she's probably put all her money in Richard Hart's ridiculous projects. But she's on a payment plan with Eric Wall now, so she's paying him like $100 a month for the next 50 years or something.
Damn.
Yeah, it's pretty funny.
Yeah, there definitely was. I mean, there was a documentary. I think it was called King of Hearts or something about the whole Pulse Chain thing and the Hexicans, and there was some. You know, they delved into a bunch of, I guess, the community, and they spoke with a bunch of people who'd put like substantial investments into it, life savings. One of the stories that the people that they followed for the story sold his house, and he had to kind of convince his wife, and they had a young family, and it was hard to watch. It really was hard to watch.
Now, I do want to sort of caveat this as well, because I know there are some IR customers who do buy the Hex. So Hex is one of the coins that Richard Hart spruiks along with the Pulse Chain stuff. I honestly believe it's all a scam. Not to say it is. Please, if you do have further questions about this stuff and you're not sure and you're on the edge or you just want to chat, please reach out. I'm happy to talk about it, happy to run you through all the stuff that I know about it. I know you probably got an opinion on me because most of the Pulse Chain community know who Eric Wall is because he's very prominent in the Pulse Chain community. And you probably have your opinion of me now that you know that I generally lean towards what Eric Wall says on this stuff. But if you do want to talk about it more, I'll promise you I'll try and give it the most unbiased view. And if you want to learn more about it.
Yeah, I guess this is the challenging part with crypto in general is that it's at the end of the day it is a open source technology which allows, and that's the beauty of it, right? It allows anyone to create anything they want using this tech, right? And exactly what it'll be used for and exactly what the outcome of the success of that particular project is so uncertain, so really uncertain. Which is why I would never want to give financial advice and why you really have to be really careful and sort of take your time and learn all this stuff before you make any decisions and all that kind of stuff. Because the reality is, I mean, there's a funny story, and this is, and again, it's not making a comment, like a judgment call on the value of this, but Dogecoin was a great example. So it's a fork of Litecoin, which you all know, and it sort of it played on a popular meme, I guess, that was getting around of the Shiba Inu, and we know it's been a huge, it's been a successful meme coin in a bunch of iterations. But classic example, the guy who created it literally just kind of forked it, sent it off into the world. It caught fire, went viral. This thing went from a value of basically nothing because it was just a fork of Litecoin. It did nothing. It promised nothing. It just took off into the world and made a lot of people a lot of money. You heard the stories about people who was like, these Dogecoin millionaires overnight, and they were, people working out ways to get entrapment babies to marry Dogecoin millionaires. Remember these kind of stories? They're just outrageous, right? It's just, it does make you shake your head sometimes. But someone asked, and of course, later on, as Dogecoin became more familiar and everyone's heard of this Dogecoin and all this kind of stuff like this, people were going, well, with the guy who did it was actually a genius, right? And he created all these things and, he thought about this and he thought about that and blah, 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 blah. And so someone actually asked the guy, messaged him before, I guess, his X account went quiet. And it was like, so when you created Dogecoin, were you thinking about block size? Were you thinking about, transaction finality? Were you thinking about blah, 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 blah? He goes, he didn't write this, I'm paraphrasing, but he's like, mate, I forked it in 2 hours and forgot about it. You know what I mean? Like it was just an experiment that kind of played out. So you just don't know, right? So the guy put no effort into it, never promised anything, yet it minted a bunch of millionaires, which is incredible. But of course, we've seen a lot of copycats and a lot of charlatans who have gone out there and promised all kinds of things, and you have to stay careful, stay wary out there, folks. Yeah. Is that? Oh.
Yeah, that's good.
That's not Stadler and Wardoff at all.
Yeah, no, because I was
Stadler and Wardoffish at all.
I was worried about everyone, like all the strategy guys from attacking me. So now that the Pulse Chain guys attacking as well.
Who else can you offend today, Nick?
Yeah, that's right. Actually, I didn't really enjoy your haircut.
Neither did I.
I like that.
Every time Jared makes a comment, he's like, "Man, your hair looks shit today." I'm like, "I'm trying to fix it up," but like, you know what the problem is. You know what the problem with trying to fix your hair on the camera is? It's all reverse. So everything you're doing is like it's like double mirrored. Like you normally look in the mirror, but this is like double reverse. It's like actually,
so what I'm saying it looks shit. I actually think it's great.
Yeah.
Oh, the shit.
It's the shit. Yeah.
Oh, okay. Take it all back. I'm gonna come tomorrow. I'm gonna come show up next week with an even more ridiculous haircut.
I thought I said shave those sideburns.
Well, I like your haircut, Nick.
Thank you.
And I think you have a lovely shirt.
It's the same one every week. When the podcast stops, I just take it off. I put it on the table here. Put it back on.
Oh no, we've been booed off the air. Jared's cut us. We're still alive. Oh, geez. Oh, now I'm coughing. Well, I'm going to go brush my hair. And Nick, don't you go change your shirt. Is there anything else we've got to cover off on this week?
We can talk about the Solana, but
Oh no, let's do that. Solana, is it good or is it bad? I don't know.
there was
You wanted to talk about it, Nick, so you asked yourself
I'm
a
obviously
question.
trying to pump my own bags. No, just kidding. Solana recently announced that they had done a test on the production network, I believe, where they capped 100,000 transactions per second.
Excuse me.
Which they claim is the highest number of transactions per second on any kind of major network.
Right.
Really.
Just for contrast, how does that sort of stack up against like the Visa network and stuff like that?
Oh, good question. No idea. I imagine the Visa network is probably. I think it's from my memory says it's like in the hundreds. So 100 to 200,000 transactions per
Like
second.
100,000 transactions per second is a lot of transactions.
Yeah.
4,000.
Oh, there we go. Oh wow. Less than I
Oh,
thought.
well, that's more than the Visa network.
More than
so
Visa network, but Visa network doesn't do like perps and trading and whatever. I guess they're just purely for transfers.
transactions, yeah.
To put it in context, the Solana network at the moment does about 1,000 transactions per second. So that's a good multiplier above that. It was a cool stat, and I'm good on them for getting it up there, and well done on the tech. But the fact is, it was a kind of not a fake number, but it was a simulated number in that almost all of the transactions in that 100,000 were what they call no-op transactions. So the transaction that was getting minted to the ledger or blockchain or whatever they call it actually wasn't doing anything, wasn't transferring money, it wasn't doing any kind of DeFi. There was no calculations. It was just a simple, here's something in a block, like put a bunch of things in a block and move it to the next node. So it was cool that they got there. Realistically, could they actually get to 100,000? No, not at the moment.
Fake news.
Yeah, but I mean, it's like 100,000. It's great to. I'm glad that they're aiming for that. I think we spoke maybe a couple months ago, about how Solana wanted to be the ASX of the blockchains or something like that. Like they wanted to be this sort of platform where you can natively do trading, I suppose, or like swaps. And I guess this is part of the goal to get there, right? So they've got to start somewhere. They're building it. They're not going to do 100,000 real transactions at the moment, but they've proven that, the no-ops, they can get up there.
Mm-hmm.
What does this mean for real life transactions? Can they get to 10,000 maybe next? That'd be cool, 10,000 real transactions. Some guy was quoted saying that he believes that real transactions could get to 80,000. Is that true? I don't think that's true with the current node infrastructure. Like a lot of upgrades would need to happen just to be able to process that kind of throughput. But yeah, I mean it's interesting. Like I guess this is Solana's attempt to keep its head above water and stay in front of Trump and get some,
let's get some headlines.
Get some headlines. But it's not bad stuff. It's good.
Nice. Alrighty. Well, I guess we can. I was going to say let's start wrapping up. Any more comments? Any more tips? Next week, actually, for the crowd, for the audience. Next week we would love to delve into some more history stuff. Yes. So we need some comments from the listeners, viewers out there.
Please reach out.
Love to hear more about it. Seeing as Nick's veered into the world of styling tips, perhaps throw some tips out there. You'd like to see some shirts, like to see some colours, like to see some shapes.
I can
thrown
do
out there.
different colours. Yeah.
Like to see some new hairstyles. I'd love to hear that too. I might try something different. I don't know what I'm going to try. But seeing as I've got to come back and impress you somehow next week.
Maybe like a reverse mohawk where you just shave straight down the middle.
That'd be good. Yeah, all right, we'll do it. So I'd love to hear from the viewers next week. We're going to be back. Actually, no. You know what? I'm going to be away next week.
Okay.
So maybe actually, I don't know if we can do it on Monday, but I'm going to be away Tuesday. So I won't be next week. Guest host. Yeah, get someone else in. Why not?
How will I survive?
Well, can you get an AI me or something like that? One that has better hair.
Just hallucinate.
Look, get an AI lead with like the speed stripe, the Nick's like fashion suggestion down the
that's
middle.
the only way we'll know it's not you.
Because you'll have a better haircut. Other than that, I guess we probably, other than that, we could try it Monday. Anyway, whatever. If we're not seeing you next week, we'll definitely see you the week after that. Nick will be back with a better shirt and
it's going to be the same shirt, FYI.
and all right, till then.
See you later.
Salute.